Welcome to weekly market update. This live vision will cover fundamental analysis in the week ahead, global coverage of current economic data, including major markets news, analysis, and events, how to apply the best trading strategies prior to news being released and after. First, I'd like to start the session by giving you some information about me. My name is Ihab Jubil. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own trading robots, signals, and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Let's start the session. The month of December will bring plenty of economic data and monetary policy statements for a currency market that is trading with high levels of uncertainty as geopolitical situations rise. Next week alone, we'll have the central banks of Australia, Canada, and Europe issue rate statements. And if that was not enough, the week will be capped by the U.S. non-farm payroll report and the Organization of the Petroleum Exporting Countries, what's called OPEC, press conference on Friday. The U.S. Thanksgiving holiday brought lower liquidity and limited data releases, which results in currencies trading in a tight but volatile range. You will need to be aware of this week's events and adjust your trading strategies. It's a busy week. In Europe, the single currency fell against most major currencies this week. European bonds fell to record lows as dealers are expecting the ECB to follow through with bold action this week. The euro has been under pressure from easing expectations, with one of the major market trends being the monetary policy divergence between the federal and the ECB. ECB President Mario Draghi famously said in 2012 that he would do whatever it takes, and investors are now getting ready for another round of stimulus to be announced on December 3rd. His press conference. A failure to convince the market on the commitment of the central bank could result in a reversal of market expectation and a change of the trend direction of the euro. As usual, after the interest rate decision, he will hold a press conference, and a failure to convince the market will result in a reversal of market expectation and the change of the trend of the euro. In the US, the non-farm payroll report last month crashed the expectations by posting a 270,000 new jobs increase, when the forecast called for 180,000. It was forecast at 180,000 and the release was 270,000. The forecast this time around is 200,000, although there have been calls by various economists that the slack in the U.S. economy might be getting tighter as more people find work capping the upside of the employment report next year. And we will discuss this news release later today. The IMF will announce today its decision on the inclusion of the Chinese yuan as a reserve currency. The currency fell ahead of the announcement as its lack of convertibility could affect the final weighting it has on the SDR. So if it would be accepted, we expect to see the yuan have low trend. Oil continued to pile losses ahead of OPEC meeting. Crude tumbled more than 3% on Friday as Chinese worries about the economy and the oversupply. OPEC members who depend on oil revenues, like Saudi Arabia, to balance their budget have been hit hard by the drop in oil prices and have a different times request. Saudi Arabia cut production goals for the organization with the intent to boost prices. The tactic has proven unsuccessful as Saudi Arabia continues to pump at record pace. The lower growth forecast in China and the rest of the world have cut demand, and with Iran about the comeback online, a more coordinated strategy to stabilize prices is needed. This week, we will watch these tradable events, all in London time. A busy week. On Tuesday, 1st of December, tomorrow at 3:30 a.m. Australian interest rate, RBA interest rate. 9:30 a.m. UK manufacturing PMI. At 1:30 Canada GDP monthly release. At 3 p.m. US ISM manufacturing PMI. On 2nd of December at 12:30 Wednesday, Australian quarterly GDP quarter release. 1:15 p.m. US ADP non-farm payroll employment. And at 3 p.m. Canada interest rate or Bank of Canada interest rate. And then on 3rd at 9:30 a.m. UK services PMI. At 12:45 p.m. interest rate in Europe, ECB interest rate. At 3 p.m. US ISM manufacturing PMI. On Friday at 12:30 a.m. Australian retail sales. At 1:30 p.m. Canada employment change, and at the same time, at 1:30 p.m. U.S. non-farm payroll. I will talk in more details about some or most of this news. First news us here today is Australia RBA interest rate decision that will be released on December 1st at 3:30 a.m. London time. Australian RBA interest rate decision is predicted to remain the same at 2%. However, with recent rhetoric leaning bearish, I would not be surprised if RBA decides to cut rates again. So our trade plan is if RBA decides to cut interest rate by 25 basis points, we will sell the Australian dollar. If RBA decides to keep hike rates back to 2.25%, we will buy the Australian dollar, as market is expecting an unchanged verdict. Ultimately, we are a bit bearish on the Australian dollar, as RBA has opened the door for rate cuts, and considering recent drops in crude prices, RBA definitely have room for rate cuts. If we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment, mostly downwards. But we will watch the news, we will see the trend before the news release, and we will wait to see the reaction of the market, and then we will just follow the trend. If we don't get any change in the interest rate. UK manufacturing PMI will be released on December 1st at 9:30 a.m. London time. UK manufacturing PMI should provide some momentum for sterling, and with liquidity thinning down as we come to the end of the year, we are likely going to see some volatility if we were to get a surprise. It's forecasted at 53.7. It was previously 55.5. How to trade this news? The plan to trade this news is we are looking for a tradable deviation. The tradable deviation is the difference between the forecast figure and the actual release figure. So we are looking for a tradable deviation of 2. Since this is a leading indicator and its impact may hint the future trend of other economic indicators such as inventory, employment, and retail sales, the market usually reacts to this release with volatility if we get our deviation or our surprise number. We will be looking to buy the pound if we get 55.7 or better. We will buy the pound, or looking to sell the pound if we get 51.7 or worse. We will use the retracement trading method to trade this release. We will wait for the deviation number, and then we wait for the market to move with momentum first, and wait for a decent retracement before entering the market and buying the option or placing our trades. And we will just buy the pound, or we will consider buying the pound if we get 55.7, and you will sell it at 51.7 or worse after the decent retracement. So we will wait for the deviation and the market to move with momentum first, and after the decent retracement, we will enter the market. But if we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment downwards. Now we can see in the chart the pound is following downtrend against dollar. Canadian GDP will be released on December 1st at 1:30 p.m. London time. Canadian GDP is expected to come in at 0.1%. and considering current weak crude prices and the lack of inflation globally, if we were to get an upward surprise, we will probably see an even more reaction as market is not expecting a strong release. Nothing says that we will see strong release because the lack of inflationary pressures and the weak crude prices. How to trade this news? We will look to sell the Canadian dollar if we get minus 0.2% or worse. We will sell the Canadian dollar. We'll sell it against stronger currencies like dollar. Or we will buy the Canadian dollar at 0.4% or better release against weaker currencies like euro. So we will consider selling the Canadian dollar if we get minus 0.2% or worse and buy it at 0.4% or better release. With recent weakness seen in the Canadian dollar, a strong fundamental such as Canadian GDP figure may be the catalyst. We need to see more volatility in the Canadian dollar. So it's important release. We will be looking for an after news retracement trade for this release. As usual, if we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment. That means more weakness in the Canadian dollar. US ISM manufacturing PMI will be released on December 1st at 3 p.m. London time, tomorrow. US ISM manufacturing PMI is a leading indicator, especially in a non-farm payroll week, as positive or negative surprises tend to change the market sentiment all the way to Friday's release. So we'll trade this release and close the trade, or considering making our option expiry Thursday or before the non-farm payroll release time. Remember, it's forecasted at 50.6. Previously, it was 51.6. How to trade this news? We will be looking for around 2 points of deviation for this trade. If a 48.6 or worse number is released, we could see some dollar weakness, therefore sell the dollar. So we will sell it if we get a 48.6 number or worse. We will sell the dollar against strong currencies at this moment. I recommend usually when I trade the American dollar, US dollar, I trade it against yen. If the opposite is true or 52.6 figure is released, expect to see stronger dollar in the short term. Therefore, we should buy the dollar. We have here another example of the dollar Swiss franc. Because of the recent weakness also in the Swiss franc, the dollar Swiss franc has got trend upwards. So if we get a good, better number than expected, 52.6 or more, we can trade it against Swiss franc or against the and if we get 48.6, we will consider selling the dollar against stronger currencies at this moment. We will be looking for an after news retracement trade for this release as usual. And if we don't get the deviation number, expect the market to follow the pre-release market trend, and the dollar will keep the trend upwards. And whatever the release, and whatever how you will enter the market, consider making the expiry of your option before Friday. Australian dollar GDP quarter release will be released on December 2nd at 12:30 a.m. London time. The Australian dollar GDP is a quarterly release that's more likely to surprise the market. Usually pay more attention to quarter release. Because it's more likely to surprise the market more than a monthly release. But with recent strength in the dollar and weakness in the euro, I would be careful holding along or buying or making up option for Australian dollar for long term. I would recommend to make it in short term according to the news actual release. It's forecasted at 0.7%. Previously, it was 0.2%. How to trade it? We will be looking for a deviation of 0.3% to trade this release. If we get 1% or better, then buy the Australian dollar. However, if we get 0.4% or worse, we will probably see Australian dollar start to move downward, and we should sell the Australian dollar. We will be looking for an after news retracement trade for this release. If we don't get the deviation number, expect the market to follow the pre-release market trend at this moment. There's something important. I get questions about it, about the resources that you should follow to get the number, the actual releases, and it should be on time. So you can make, so you can enter the market before others. You should have updated releases of the news. You can find the news release, the actual releases, updates automatically at my website. Just go to ihabjubil.com and then press the resource page, and you will find one of windows there about the news that updates automatically when the news release. Just to go to ihabjubil.com and press resource page. US ADP non-farm payroll employment change will be released on December 2nd at 1:15 p.m. London time. US ADP non-farm employment change is usually a good indicator for Friday's non-farm payroll release with end of the year hiring distorting the overall figure. I would expect an upward surprise. It was forecasted at 190,000, previously 182,000. How to trade this news? If the deviation of 50,000 is hit, this is our deviation number or surprise number. The market probably will not have a problem pushing it, and this will undoubtedly change market perception for the non-farm payroll release. And again, I prefer if you will trade this news, it will be better to close your trade or to make the expiry of your option before Friday release of the non-farm. We will be looking for a deviation of 50,000. So if we get a 240,000 or better release, I would be looking to buy the dollar against the weakest currency. If we get 140,000 or worse, then I would be looking to sell the dollar against the strongest currency. In the event that we do get our deviation, if we get our deviation, we will be trading this news based on after news retracement trading method that I described earlier. And always remember, if we don't get the deviation number, expect the market to follow the pre-release market condition and sentiment. That means the dollar will keep its strong trend upwards. We will trade this news then if we get 240,000 number, we will buy the dollar against weak currencies at this moment, and we will sell the dollar if we get 140,000 or worse. There is another thing that you should pay attention to, that there is record always at the YouTube channel for Pioneer.com. You can watch the record for this webinar there at Pioneer.com channel at YouTube. Bank of Canada interest rate decision will be released on December 2nd at 3 p.m. London time. Bank of Canada interest rate will probably not be a surprise, as there are practically less than 1% of a chance for Bank of Canada to surprise the market, especially considering the current downtrend or downward trend in crude price that have provided plenty of room for Bank of Canada to keep current policy steady. I don't expect Canadian dollar or Bank of Canada to change their policy, to change the interest rate. It's forecasted as previously 0.5%. How to trade this news? Most analysts agree that the Bank of Canada will hold rates at 0.5%. We'll be trading this release with a 0.25% deviation or 25 basis points. In the event of a surprise hike, it's almost guaranteed that we will see strong market movement immediately after the release. However, in all reality, Bank of Canada is unlikely to surprise the market, especially considering recent economic data and the crude prices. And actually, if the market moves up or down after the interest rate decision, we should just follow the trend. If we get any deviation number, or if we don't get any deviation number, we will just follow the trend after the release. So if we get 0.75%, we will buy Canadian dollar, and if we get 0.25%, we will sell the Canadian dollar against stronger currencies like the US dollar. And if we don't get the deviation number, expect the Canadian dollar to follow the pre-release market trend downwards. UK services PMI will be released on December 3rd at 9:30 a.m. London time. UK services purchasing manager index could be another mover for sterling this week, with Bank of England no longer expected to hike the rates. A stronger release will probably not move the market much, but a weaker release, the pound will definitely consolidate. So I expect the pound to consolidate with weaker release, weaker than expected. And not moving much with stronger release. It's forecasted at 55.1, previously 54.9. How to trade this news? The service PMI is tradable with minimum deviation of 2.5. Surprise factor or number between the forecast and the actual release. If we get at least 57.6 or better, 57.6 or better, we could see some demand in the pound, and we will consider buying the pound against weaker currencies. If we get a 52.6 or lower, the pound could weaken, and we should look to sell the pound against stronger currencies in short term, because most probably it will, or I expect to consolidate after going down for a bit. If we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment at the time of the release, as usual. ECB interest rate will be released on December 3rd at 12:45 London time PM. ECB interest rate is done in two parts. First was the rate decision at 12:45 PM on London times. Then, so it will be at 12:45 PM. Then followed with a press conference at 1:30 PM. Current market expectation of for ECB is that we will see further easing, whether it be an adjustment to the current quantitative easing program or further boost by negative deposit rate, or combination of both, more quantitative easing program or more negative deposit rate. Obviously, the press conference will be crucial, and I recommend everyone to watch the forecast live. How to trade this news? ECB Chief Draghi will issue the official statement on the rate decision in the press conference. If the ECB make a cut in interest rate, then expect market to go into a selling frenzy, and we should jump in immediately. And of course, if the ECB decides to keep the rate unchanged to as expected at 0.05%, then we should see relatively no change in the market, as this leg of move is expected. So if ECB decides to keep the rate unchanged, we will also consider watching the press conference to see what he will say there, if he will disappoint the market or not, if he will take new decisions or not. So interest rate decision is not everything this day. If we don't get the deviation number and the Draghi disappoints the market at the press conference, I expect the euro to change the trend direction upwards. So it's necessary to see action at this conference or an interest rate decision to see the euro keep going down or consolidate. But if we don't see any action and interest rate will stay the same, I expect the euro to change direction and change the trend. Australia retail sales will be released on December 4th at 12:30 AM London time. Australia retail sales release is usually a high impact release, but with non-farm payroll, you will just the next day I would use caution and stay out of the market unless we get a strong reaction from the release. It's forecasted at 0.4%, previously 0.4%, the same. How to trade the news. The deviation that we are looking for, the Australian retail sales monthly release, is for minimum of 0.5%. If we get a 0.9% or better, we will look to buy. And if we get a minus 0.1% or worse, we will look to sell. There is a high probability of market movement of over 50 pips in the next 2 hours if we get our deviation. So we will buy the Australian dollar at 0.9% and we will sell it at minus 0.1%. As usual, we will buy it against weak currencies and we will sell it against stronger currencies at this moment. If we don't get the deviation number, expect the market to follow the pre-release market condition and sentiment at this time of the release. And don't forget also to trade this news using after news retracement method. The 3 W's. Wait for the deviation, wait for the market to move with momentum first, and wait for a decent retracement before entering the market. Last news with us here today is U.S. non-farm payroll employment that will be released on December 4th at 1:30 p.m. London time. U.S. non-farm is expected to be around 200,000, and with the federal calling on a weak trend in jobs growth, we probably will not see a strong surprise. But if there is such a surprise, we will follow our plan. Non-farm payroll employment change release is forecasted at 200,000. The unemployment rate is expected to be at 5%. If we get a significant lower release on the non-farm payroll, like 130,000 or worse, and a slightly higher unemployment rate, 5% or more, so significant low release and unemployment to be the same or higher, we will look for to sell the dollar against stronger currencies. Because speculation for federals to potentially delay the timing for the first rate hike later on this month. And this first scenario is not expected this much. On the other hand, if we get a strong non-farm payroll release, 2070 or better, and the unemployment rate falls or remain at 5%, dollar could get stronger, and I would buy the dollar against other weaker currencies. So we will, and this is what I expect, to get strong release and unemployment rate will stay the same. So we'll consider buying the dollar against weaker currencies at this moment. If we get a conflicting release, then we will wait and see how the market reacts first. If there is an overwhelming sentiment driving the market, we will get plenty of opportunities for an entry if we just wait for 5 minutes after the release. We will get a much clearer view. And it's actually with all releases, all news releases. If you get conflicting release or you can't read the news like clearly, just wait for 5 minutes, see clear view, see the new trend if there is no clear trend for it, and just follow it. Just enter the market after 5 minutes. The more you are patient, the better for you. So if we get a conflicting release, we should wait for 5 minutes after the release to get a clearer view. If we don't get the deviation number, I expect the market to follow, as usual, the pre-release market condition and sentiment, and the dollar will keep going up. Because expected for the rate hike on December. Last thing, remember to wait for a possible revision of the previous release number, because market usually overreact with the revision. So last thing, you should wait for a possible revision of the previous release numbers. I wanted to remind you, if you missed a webinar or want to watch it again, you can watch it at binary.com YouTube channel, and the link is sent to you. You can also find instant updates of the news at resource page at my website, ihabjubil.com, then press resource page. So then I'd like to thank you for attending today's webinar. We will hold the following webinar next Monday. Goodbye and see you next time.